Today is the 7th of October 2010, a quick little technical analysis video within the silver market using the charts from finviz.com. And in intraday trading earlier this morning, the price managed to rise up to $23.50 per ounce. We have had a price correction down towards 22.50, or that of a full dollar off of the COMEX price. And there's no moving average on here. However, the 5-day moving average is rising, and we would be pretty much a little bit below where the 5-day moving average is. However, when you have a rising 5-day moving average, we'll say a rising 20, we'll say a rising 50, 100, 500, 2,000-day moving average, that means the buyers are in full control within the market. And for the most part, all of these sell-offs are guilty until proven innocent. We'll talk now about some Fibonacci. The top, which is pretty easy to look at on the screen, being $23.50. The bottom on here, I'm eyeballing towards the $21.85 mark. Therefore, if we look at some Fibonacci totals, this spreadsheet gives me exponential and linear figures when the price difference is not that big like it is in this case. So pretty much reflect the same numbers, which they do. We'll say 22.86 and 22.47 and look at the 5-minute chart. What I can do is copy this image, paint it on a paint program, and 22.86 would be roughly somewhere in here. And the bottom part would be somewhere in this area here. So therefore, when it came down to the 38.2 level, it really didn't find that much of support. And thus, when we have this big candle here, there's a good chance we'd be going down to this level here. That's exactly what happened. And within this move lower, you can see how the candles work out. You have a move lower, you have a time consolidation in a descending triangle formation, which resulted its way to the downside. It got consolidated over time for about 10 minutes within the Fibonacci, continued the trend lower, a price correction, continues the trend, price correction, continues the trend, but this time it made a higher low. We have just made a higher low right in here. We have pretty much matched this top. So therefore, it's trying to stabilize and trying to correct the trend towards the market. Now the bottom on here looks like 22.48, and if we put in the variables for 22.48 on this mark, the price numbers we would be looking towards going to is 22.86, 23.10. And 22.86 just refers to this level here, and then 23.10 will have some importance also. Therefore, what a successful technical analysis play that is by the book would be, we've consolidated for a little while. We've had this level of resistance in 2 different occasions. So what you'd want to see happen is a move up to this Fibonacci level. You want some resistance that has been established, which quite frankly is actually big time established. We have 2 levels of support, 2 levels of resistance. Therefore, if it can manage to come back down to this 22.70, 22.68 area, sort of like this, we'll just draw it in, there we go, then it has a better chance of breaking through. Maybe it can manage to get up to this Fibonacci level. If you are trading on the market because you see this low, some might put their stop below here, some may put their stop below here, and even some below this line, or even below this line, which is the tightest of potential stops within the silver market. We're going to now switch this up to the hourly chart. And we already seen this briefly before. We'll just take a look at this on the paint program so I can draw the trend lines in here. That's the wrong chart. Let me copy the image again. And I was mentioning about the uptrend line that was taken down. The trend line that looks something like this. We're going to see what's going to happen now that we're back within our old trading range, because that is not an uncommon thing to have happened. Is you pierce above this trend line and then you stay within the range. Actually, that's been going on within the gold chart. If you look at the long-term chart over the last 10 years, it's done this on a couple of occasions where it broke through resistance and then just battled its way back within its current trend. So that's one of the things that could happen, is that it keeps battling its current trend, and that would be just trading within this range. If it's a real bad failed moves can create fast moves, and thus the fast move would have a move that would bring us much lower, maybe down to 21.50, even down to 21 per ounce on a failed move. However, if this breakdown here is a failed move, it manages to get back towards the top part and then break above it, then the fast move would be coming towards the upside. Because the sellers tried to pull the market down, the buyers are like, that ain't gonna happen, and that sets off some extra buyers within the market, more short covering, and generally speaking, the failed moves create fast moves, and if the failed move is from a down move, the fast move is higher. If the failed move is from an up move, the fast move is lower. Now we're going to look at this now on the daily chart, and we'll mainly just be looking at the last few days, because before then all this pretty much was a time consolidation. As in, this here is just one large, massive time consolidation. The longer you're in a range for, the bigger the breakout or breakdown should be. And we were in it for quite some time, and we've had a pretty decent size uptrend thus far. This trend line obviously still intact. This resistance level, it could very easily just be a pierce below, and this moves higher. After all, the path of least resistance is that of higher. Now, from this breakout, you can almost make a case of just saying 18 as a good low point, but I'm not. I'm going to make 1775 and 2350. It's really not that big of a deal what numbers you pick, because as long as you're close, it's all going to work out anyway. But from 1775 and 2350, that gives us 2111 and 22 as the next key levels to look out for. So 22 is where we had this previous level of resistance. Nothing wrong with coming back and finding support at its last level of resistance, which is only a 23.6% retracement. The next one is that of 21. That would still be a healthy move for this market to encounter if it can have this run to 21. Now, the next chart we'll look at is the weekly chart. And the weekly chart, it's looking overextended, some may say. After all, we've had a big run towards the upside, but we have taken out this high, and for that matter, this entire range was taken out with no resistance on the weekly chart. So that's a very, very strong sign to say that it's just going higher. It's up too much, some might say. And I've said that a long time, or lot this video. But there's a reason for that. And that's because of this particular spreadsheet that I've been working on. It's a logarithmic spreadsheet. Let me just put it linear so that you can see the difference between a logarithmic and linear move. I don't know how this got gray in the background. I just changed it to logarithmic, but this shows you the exponential scale silver should be growing at. It's not. It's not. That's what it should be at. Okay, I didn't mean to do that. Let me just try to make this logarithmic again and show you how this chart is calculated. What I have done is I have taken the price of silver that it historically traded through during the 19th century, which was around $1.25 per ounce. When the Fed came in 1930, the price was much lower than its historical values, meaning it's been pushed down. It was been manipulated lower, as some might say. Then we had this move up to 1980, which really was overextended. This is what silver should be based on inflation without any supply and demand issues. If the supply and demand issues means that it should be more expensive, then it should be above the blue line. If the supply and demand says it should be cheaper, then it should be below the blue line. But this tells us silver right now, without its inventory counts, without its physical uses, but based on the currency itself, it should be $90 too much. So you can say it's up too much on the weekly chart. You can say it's up too much on the daily chart, but we could also say it's down way too much on the inflationary trade value for silver. So I'd like to thank you for watching. We'll do a quick little 5-minute update, see if the breakout looks to be happening. It's just mainly stabilizing through time. Right now, as far as some key support, 2264 is an area you want to see it hold on the very short-term time frames. But any selling that comes within the silver market does bring in amazing buying opportunities. It is overextended on the daily time frame. I don't know how long it's going to stay overextended. We will retrace 38% at some point from this low to this high. But if that first 38% retracement happens to come when silver is 35 an ounce, that means I'm saying, hey, wait a second, it's coming back to 27 per ounce. Take care, everyone.